Hey, what's up everybody? It's your mortgage expert, Brian McCauley here. So you're looking to buy a house in Dallas, Texas, but you're having trouble saving money for a down payment. Stick around. In this video, I'm going to teach you about our 0% down USDA program. And guess what? You don't have to be a first-time homebuyer to get it. Let's go. So listen, when buying a house, one of the hardest things for people to do is save for a down payment. I mean, clearly almost everybody can make the monthly payments because the renters out there are renting and they can afford to make the monthly, but the hardest part is saving and scraping together part of the down payment, 5%, 10, 20, 30, whatever it is. So I want to talk about our 0% down USDA home loan program. It is a game changer secret loan program. And it is designed for anybody that does not want to work in the city. That's right. So there are a couple restrictions and guidelines around this 0% down USDA program. The first one I want to talk about is location. So what happens is metropolitan starts to grow and expand, and there's too many people living just in the city. They want to encourage people to move and expand to, I would say, the outsides of the major city limits. Now, it doesn't have to be completely rural and completely country, but I would say it's on the first layer out, maybe 10, 15, 20 miles outside of town. So USDA loans are geographic and specific and approved in certain areas. So what happens is when you are wanting to qualify for a USDA loan, there is a USDA map. I'll put a link here somewhere where you can literally go in and you type in the property address. So if it's an existing one, you can type in the property address. And literally, if that area is eligible, it'll pop up on the map green. If the area that you're looking at is not eligible, it'll pop up red. Very simple. So if you're looking for a certain property, you said like, man, I like this property, I like this area, I want to put USDA eligible, am I good for a 0% loan here? Type in the address, it'll pop up green or red. Now, if you're doing a new construction house and there's not a physical address yet, what I would tell you is go to the county zip where the builder is going to be, where they're going to build. You can type in the zip and you can see if that specific area, same thing, is green or red. So it's very easy to navigate. The restrictions are it is only for certain geographic locations. They do change year over year because obviously as certain parts build out and complete, they want to move them to other places to encourage people to to continue to expand. So you just have to use the USDA search engine to figure out what towns, cities, areas are eligible. But type it in, red or green. Green all good, red not good. Okay. The second thing about a USDA loan is to qualify outside of where you live is income. Okay, so there are income restrictions on these loans. Now they are extremely flexible. Most of the time, especially in the Dallas DFW area, the way that it works is USDA counts the number of people in the house based on how many heads live there. It doesn't matter how old. Okay, so if there's husband, wife, son, daughter, that would be 4. Okay, so the income restrictions are based on how many people are going to live in that house. Okay, 1 to 4 has a certain income restriction. It's about $115,000 total for the total household income. Okay, if there are 5 to 8 people that are going to live in that house, the total annual income restriction is $150,000, but that's still really flexible. So if you find a place in town geographically is approved and you're in a 1 to 4 person family, the total combined income that the 1 or 2 individuals in the house that are adults working is equal to or less than 112 to 115 grand, you're all good. Same concept, but if you're in a bigger family or you're going to have a grandma live with you or something like that, the total for everybody in the house that works and earns is about 150. So if you meet those two, geographically it's a yes, income it's a yes, then you're all good for the USDA loan. So let's get into specifics about the details on the actual loan. Hey, property's good, income is good. So let's talk about what the loan program requires of the consumer from a credit and interest rate and all this stuff. Well, with this program, you can get an approval as low as 500 on the FICO score. Now that's what's called a manual underwrite. I won't confuse you with that, but if your credit's challenged, they will still go down to 500. It doesn't guarantee that you will get a loan, but it says if you wanted to do what's called an old school manual underwrite, you had challenge credit, in theory, they would allow a 500. What you really want is you want this USDA automated system, which is a robot that looks at all your stuff and says, hey, this person's good. In order to make that happen, you need to get a 640 FICO, but 640 is still very fair. So that's what I would be focused on if I was a consumer looking to get a USDA loan, because a manual one down to 500, they leave that decision too much to a human. And if they don't like things associated with the loan, there's about a million things that they look at, they can automatically decline you based on manual rules. Where if you get something through the automated system and it approves you 99% of the time, they leave it up to the automated system. So for this exercise, let's just assume you need a 640, okay? Area good, income good, 640 credit score good, debt to income ratio, USDA will want about a 40% debt to income ratio. They're a little tight on that, but of course, a lot of times these are for people that are on the outskirts of town, smaller income limits. They don't want people to overextend themselves, especially because they're doing 100% financing. But still more than fair, especially if you're doing zero money down. Now the interest rates, they're competitive. They're more in line with like the FHA loans and the VA loans. They're usually better than conventional loans. It is 100% financing. It does have monthly PMI, but that PMI is very minimal. So like on FHA loans, it can be 0.55% of the loan amount. USDA, I believe, is 0.35. It stays on there for the life of the loan. It is a minimal insurance cost, but it is still better than paying the FHA PMI or paying the conventional PMI associated with loans. And so you get 100% financing, you get a really competitive interest rate. You do have a little PMI, it's 0.35 of the loan amount. So obviously if you had a $200,000 loan, that PMI would be $70 a month, but they have to put that in place because of the risk associated with doing a no down payment. Other than that, the loan is really a great loan for anybody that meets the requirements. Anyone that wants to live outside the city, anyone that meets the income household, anybody that's got a 640 FICO score, and anybody that wants to keep money in their pocket and wants to do it zero down. Now, last but not least, what's great about this program is you don't have to be a first-time home buyer. You can be a second-time buyer, a third-time buyer, a move-up buyer, and the program also allows for closing costs to be paid for by the seller up to 4%. So literally you have a 0% down loan where you're not putting any money down for the down payment. However, there are closing costs associated with the transaction. So if you are buying a $300,000 property and doing a USDA loan with 0% down, there still might be $8,000 in closing costs. Well, you, the buyer, the consumer, are responsible for those costs. But if you or your realtor or the home builder structure the contract properly and you get those $8,000 in closing costs from the transaction and or paid by the seller, you could literally come to the table with zero money. And if you come to the table with zero money, that is ideal. Also, if you do 100% financing and you get the closing costs paid for, whatever earnest money that you put up in the beginning as a good faith deposit with the owner or the builder, if it's a 0% down loan and you get all the closing costs paid for, you get your earnest money back. So again, USDA is a great home loan program, 0% down, rural and growing areas, outskirts of town, does have income limits, does have geographic limits, don't have to be a first-time home buyer, super low interest rates, minimal PMI, allows the seller to pay over 4% of the closing costs. And again, you don't have to be a first-time home buyer. So for people that are wanting to be homeowners, have a challenge saving money, or may have some money in the bank, but don't want to pour it all into a house, USDA loans are a game changer for you. It's something you should entertain, take a look at, because they're becoming more and more popular. So listen, if you found this USDA home loan video useful, do me a favor, like, comment, subscribe, or even share it with somebody that you know that could benefit from this information. And if you want to get some time with us, talk about the future, figure out your housing scenario, whether it be pre-approval, financial strategy, or what does the future look like for you, call us, email us, text us. We're always here for you. Until next time, stay tuned.